Today we have Zach Manis with us. Follow him on X as Zach Manis. Zach, I've interviewed for how long? A couple of years by now, right, Zach?
Yeah. I mean, at
Yeah,
least prior to COVID, I think we did our first one back in.
yeah.
Yeah,
And I've seen him hit a lot of things on the button, but I thought it'd be interesting to start off. Traders that start off always want to know how people get from point A to point B, and everyone has a different road that they take on their journey. So you were just telling me that your first introduction to the financial world was as a mortgage broker.
that's right. Um,
And,
Watching
okay,
bond prices a little bit, but it was some good times. Got to see Fear and Greed and The Big Short from up close and personal
oh
between
yeah,
2002 to 2006, pretty much.
yeah, and you probably caught a couple of refi booms where mortgage brokers made more than realtors in those days, didn't they? Because of people using their house as a piggy bank.
Right. Absolutely. We did a lot of that.
All right. So after that, you said you moved on to
When
something even more conservative.
Right. When that got rocky, I started working with MetLife doing insurance and also retirement planning.
Okay.
And that was about the time that Avi Gilbert had me read a book. And at the time, I pushed him off and I said, no, no, no. MetLife has this asset allocation questionnaire. It's 10 questions, determines whether somebody should be 60/40 bonds and stocks or maybe
Yeah.
70/30. He's like, Zach, that was written by attorneys who just wanted deniability when the market, takes a nosedive.
Like
So
defensive medicine.
exactly. Said, no,
Yeah.
no, no, it's fine. And then eventually, 2008, 2009, I saw that things were not what they seemed like they should be doing. And so I finally read Elliott Wave Principle by Frost and Prechter, and
Okay.
it made a lot of sense at the time. And so I started studying that privately with Avi, and like we would talk about Elliott Wave counts and different things. And then he launched the ElliottWaveTrader.net, and at the time, I had to be anonymous on there as Cow Abunga, because I was still under MetLife's compliance.
Oh, okay. So it's still the Bible, isn't it? For every elitician I've ever talked to has read that book. It's usually the first book they read.
Right.
So, you
It's really
know,
presented as a fantastic textbook. And
oh,
I think, when you say the Bible, you and I are both very religious people, but I think that it in the sense that Elliott Wave gives a framework for incorporating all of the other schools of technical analysis and every other data, it just gives you context. And so you can use that to give yourself broader context or smaller degree context, and then expand and incorporate whatever else you want to incorporate into that, and see what things can be catalysts, and how that can move and change.
okay. Well, there are a lot of practicing eliticians. What would you say separates your work and how you come up with your counts compared to a lot of other people that are attempting to forecast market moves using Elliott Wave?
So I think probably two things. Avi introduced Fibonacci pinball, which was a very specific way of looking at the subwave structure, particularly inside of a larger impulse. And so we look for agreement to make sure that that's, it's not a new Elliott Wave rule, but it's almost a guideline that we can really set our watches by. And I think to that, expanding on that, is we really look at multiple degrees. Elliott wave is fractal, so the
Right.
same structures are going to repeat at the smaller degree as subwaves inside of a larger structure. And so we try and remove any biases that we might have in coming to it on our own, and just say what is the subwave structure telling us? Does it agree with the larger degree thesis, or is it hinting that something else might be the case? And so, I think Ellioticians get a bad rap for sometimes showing alternate counts. We try and limit the disparity between the alternate counts when we show them, or avoid showing them when we can avoid it. But when there are the potentials because of that fractal nature, saying, all right, right now both of these are valid. Here's the point where they would diverge. So it really doesn't matter whether it's, this more bullish count or this more bearish count, because both of them should be moving up in conjunction with each
Right.
other, at least up into this point, and then diverging from there and how they should diverge.
Okay, so you get directionality out of
Right.
that. A quick definition of Fibonacci pinball, because I grew up on pinball machines, but I knew nothing about
Oh,
fibs
you
then.
told me the story about how you ditched synagogue one time to go to the
Uh,
art.
yeah, we weren't too obvious in our suits on Saturday morning at 8 o'clock in the bowling alley trying to pull dimes out of the ball washing machine.
Right.
So yeah, it's still on my rap sheet.
Right.
So
So the very
teaching Hebrew
basic of
school.
Fibonacci pinball, Aaron Elliott and Prechter gave us a ballpark guidelines of the fib extensions for a third
Okay,
wave.
all right,
But one of the things that Avi noticed is instead of just looking at the overall fib extensions for that third wave, that the subwave one would either go to the 0.382, the 0.50, or the 0.618, almost without fail. And if it didn't go to one of those three fibs or in that region, then chances are it wasn't wave one of a third, something else was playing out. And then after a normal subwave two, the wave three of three would go to the 100% or the 1,236. And if it
okay,
didn't go to one of those, chances are something else was at play. And then
okay,
after a normal fourth wave consolidation, then you'd get to your 1,382 or your 1,618 fib extension.
okay. So you have the ability to negate a count based upon how a market performs. If it can't reach certain
Right.
fib levels, it's not what you thought it was, and you have to reassess.
Right. And that may not necessarily mean that you have to do an about face for the overall expectation, but it could mean that you're not getting a third wave of an impulse. Maybe it's morphing into a diagonal, or possibly instead of a third wave, it's a C wave. So you're only looking for a measured move at that point instead of something that's a more sweeping trending impulse that's going to go to the 1,382 or the 1,618.
Okay, well, I'd like to move on to Tesla because
Okay.
when I talked to you before, Zach, the target that you gave, at first I had to ask you to repeat it because it's so aggressive. I'd like you to, build the case and tell people what your long-term objective is, which really means there's going to be a massive turnaround of fortunes for Elon Musk compared to what he's been going through since he got involved with the Trump administration and then left.
Right.
So,
Um, so essentially, can you see my chart
yeah,
now?
we've got stock waves up. Yeah.
Okay, great. So on Tesla, I think, and you say that it's super aggressive, but I keep seeing, I keep battling with people that are throwing out $6,000, $7,000 price targets on Tesla. So it kind of makes my
Oh, okay.
1434.27 seem a little bit less aggressive there.
Okay.
But that stems from the application of Fibonacci pinball at the larger degree. So when we
Okay.
zoom out on the Tesla chart, we have this great five-wave move up off of its post-IPO low from 2010. So we have five waves up for cycle wave one. We have a nice expanded flat. So even though it didn't make a lower low from the low in 2016, we're counting this 2019 low as the cycle degree wave two. And then off of that, we have one, two, three, and four primary degree subwaves and are working on that primary wave five inside the cycle degree wave three. And then when we zoom in just on that cycle degree wave three, we can see that Fibonacci pinball that our wave one came up in between the 50% and the 618 fib extension. Then we got our wave two retrace in 2020. And then the rally post COVID came right up just a little bit shy of this yellow 123.6% fib extension. So that tells us that the primary wave five of three should then get to the 1,618 fib extension. And that 1,618, based off projected off of the higher low that we have for the cycle degree wave two, projects to 1434 and 27 cents sometime out
Okay.
in the next 2 or 3 years from now.
All right. I'm noticing that wave four with a question mark up there in 2026. Is that an alternate count, or could it
Yeah.
be
So
or is it indicative of that maybe we have a bear market in 26 going into the midterms?
So that depends on whether we can get more of a fifth wave up or and hold support in the 270 region. That's really the key to pushing that alternate count.
Okay.
We have, we're looking at this cycle degree, the primary five off of this low. We got to a 50% retrace
Yeah.
of the primary wave three, so more than enough consolidation for reliable primary degree wave four. And we're counting this as a diagonal. So even though we clearly have a three wave start and then only three waves up so far, we're looking at that as the A and the B structure inside the third of a larger diagonal. So that allows for a lot of overlap. One of the things that Garrett and I have noticed that the C wave of a diagonal, the C wave of three in a diagonal will often tend to try and be a diagonal itself. So that's where this alternate purple comes in, is that this can be the diagonal structure for the same C wave instead of a five wave impulse. But
Okay.
anything that's starting this C wave of wave three that targets the 700s to possibly even 900 region really needs to hold support in the 270 region at this point.
Okay. So this count would argue that there's not going to be much of a bear market unless Tesla stands alone. You
I
know,
mean, we
there.
do we one of our mantras is each chart on its own. You know,
Okay, you know what? That is a pearl because I get caught up in looking at market correlations, and at times they help me, and at times they're a disadvantage. But every chart should be traded like it's an individual entity
right.
onto itself.
I mean, we look for agreement. We look at sectors and we say, every Thursday, Garrett and I do a webinar and we pick a sector to look at. Every couple weeks, we do a sector review of all the sectors. But we dive in and say, okay, here's the count. Here's what we see on the sector as a whole. Here are the top 10 holdings, and then looking to see what are the standouts there that agree with that pattern and what kind of seems to look like it could be pushing something different.
Okay.
And then, or, so if it looks like there's a good long setup for rotation into that sector, what are the standouts that look like they can benefit the most? Or if it looks more bearish, what are the first dominoes that might be trying to fall?
So you brought up Avi earlier, and he's a master trader, and even master traders can get things wrong. I did see a video with him when we were approaching about 6,100 recently, and he still was maintaining that if we don't close above there, that we have a bear case developing. So I'm curious, since we took that out, the 6120, how either he or you have revised your counts now that we have this move to new highs.
Right. So Garrett and I follow the RSP a little bit more closely as the equal weight version. But we were
Yeah,
seeing the same things back in April. We had only a three wave move down.
right,
So we're looking at the very least at a corrective bounce, and that was really preferred. It's very easy to count five waves up off of the 2009 lows complete, as well as a five wave up fifth wave off the COVID lows complete. But things can extend. So we had the initial move down was only three waves down.
right.
So corrective bounce off the April low, Garrett and I put out a big list of a bunch of stocks that we've said, here's the things that we think should be getting just a B wave bounce. Here's the things that look like they can be making new highs. But even the things that look like they can be making new highs, ideally that structure is going to be an A, B, and a C wave structure to the new highs. So inside that A wave could be the exact same subwave structure as a corrective B wave. Now we got past the resistance, the reliable resistance for that to be a B wave, and instead got further extension in the same ABC up. But now it's much more likely that that is the A wave of the more bullish fifth wave extension.
Okay. All right.
So we're looking for
So
support.
we completed something off the April lows up here, is what you're
Well,
saying.
I it counts complete, but it hasn't broken any support yet.
Right. Okay.
So it
You
keeps
still need
trying to drift high.
confirmation. So that's something else. So you're an Elliottician, and even though you have a wave structure, you still need a trigger. And
Right.
I want to remind everyone out there who trades, you could see a pattern recognition, but you still need the price. Price is king, and you need a trigger to have be compelled enough to enter the market, and then you know your risk compared to a prior high or low.
I think
So,
Elliott Wave is great in terms of giving you some very good high probability risk reward setups, but also giving you the context of the larger degree so that you can understand the broader risk skew.
okay,
So, right here, even if you're leaning heavily to getting further extension up towards 7,000, in more extension of this bull market of getting this fifth of the primary wave five with the other, the green wave five higher, um, your smaller degree risk skew is a very full count off the low that clearly started as only three waves up on that initial bounce in April.
yeah,
And normal support is going to take you back to the 5,700 to 5,350 region.
okay. Some
So,
gaps there.
right.
Yeah. Okay.
Yeah,
Well,
particularly this gap.
okay. So that could probably that would set up, you're thinking timing wise, some type of low developing in August for a move into the end of the year.
Yeah, I think so. Yeah, this certainly, I mean, this can easily stretch out into the end of August, September, and then this can easily drag and extend up into the 7,000, 7,200 region
Okay.
into Thanksgiving and the end of the year.
Okay. Very interesting count. And it's amazing the greedometer, Zach. I've never seen it flip from ultra greedy to extreme fear and then back to
Right.
extreme greed in um, 3 months.
And
We've
there are a
hit,
couple of sectors that we're a little bit more concerned about. One of the things that we note in Elliott Wave, even though ideally many charts that are more bullish, this still looks like just the A wave of a bigger fifth wave extension. The fact that this got nominally higher, as well as many things over the February and March highs, it is possible to count this as all of that this fifth wave. So there are
interesting.
some charts like that have gotten a little bit, and it's a nuanced thing with Elliott Wave, but
Like
the more this
NVIDIA.
extends higher here, instead of getting the reliable B wave consolidation, the greater the risk that this is actually all of this fifth wave just topping sooner by getting more extension. So it's kind
Okay.
of one of those things where you need to go down in order to have a more reliable setup to go higher up.
Okay. Well, you and Garrett are elite in the mining sector and in gold and silver. And I remember you were looking for one more break in SILJ that happened during the April crash. And I said, "Oh, one more time" to you in an interview, and you said yes. And that's exactly what we got. And what a buying opportunity that was. I think SILJ was 10 at the end of that break. And what's it trading now? 16, 17, something like that. But um, I get a lot of heat when I talk about the fact that gold can pull back even to a 3,100
Right.
level or 2,920. That would be just a natural correction that the gold market could be due to have. Is that correct? Or am I
I
off?
think so. I think we have a lower high here from June. We have a possible five-wave move down off of that lower high and a corrective retrace that couldn't
Okay.
even get a better micro fifth wave up of the C wave
Yeah.
into the 38, 3380s to 3420s and kind of double, like drop deeper than it should, and then exasperation gasp as a double top, and then might be reversing from there. So this is pretty clear resistance on gold right now, this 3380s to 3420 region for a
Yeah.
move down at least towards 3100, and I think easily down closer to the 3000 region.
Okay. You know, I did a show once that even gold and silver bulls hate miners. because for because for years you'd have a strong day in gold and the miners would pop and then fade. In the last 4 months, the opposite has been happening, where
Right.
even silver shares are outperforming silver. Do you expect that to continue if and when we get down to 2920, that the miners are going to hold up much better than the metal itself?
Um, I think so. My concern on gold right now, on GDX right now, is that because we can get more of that consolidation in gold, this can count instead of being an A and a B here with a very small B wave that's smaller than reliable and heading up to this higher level for the parentheses A wave in a bigger inside the third of a bigger diagonal. This can actually count as 5 waves up into resistance here as all of that A wave. So if we fail to hold the 46, really 47 region in GDX,
Yeah.
that can really start to chop its way down into the mid to high 30s again. So 37, 50, 38, 39 would still be ideal support. And that could get right back up into the low 50s a couple of times on corrected bounces before it falls down in the C wave. But the immediate bullish potential to avoid that really needs to hold the
Where
40.
we're at right now, it looks
Yeah,
like to
pretty
me.
much.
Yeah.
And it's
Oh,
already starting to leak below that ideal support. So you have another chance in the 47s, but there it starts to get pretty droopy. But we were watching, the silver mining stocks were
yeah.
set up to be more bullish. I think they also put in a pretty local top, but should hold a higher consolidation before continuing up. One of the things that we like to look at a lot in our metals mining and agriculture service, though, is the TXGM, the Global Mining Index.
Okay.
Similar to RSP, it's a little bit more of an equal weight version of the mining stocks.
Okay.
So it's going to incorporate more of those smaller cap because it's not a tradable ETF like GDX and SIL and SILJ. It can have a smaller it can have positions in some of those, not really positions, but it can have some of those smaller names in its basket and not get distorted because of inflows.
Does it include copper miners?
Yeah, it has at least like COPX and FCX and LUN and a couple others.
Uranium? Does it have uranium in
I
there?
don't think it has as much coverage in uranium, but we
Okay.
do like uranium a lot.
Okay. I remember you saying that a few months ago, and it's been a huge bull move. Cameco is, probably up around, maybe it's doubled
Right.
since the April low. So,
UEC can be a little bit more bullish than this because this consolidation in here for UEC looks more like a reliable larger wave two,
okay.
whereas URA and CCJ have just kind of continued up into that Fibonacci pinball resistance region for wave one of the larger third. So would like to see some consolidation back towards the lower 30s. And 31 to 26 is even more of an ideal region. I don't think we're going to get that much. I think more likely this is going to hold a much higher consolidation like this, but that's one of the things that we talk about a lot with our members is we're going to show what the standard Elliott wave should look like and then make adjustments based on what the charts give us rather than saying, here's what we want to see just to 31 or even a little bit more shallow than that, because you can't rely on that. Usually if you're going to get a corrective consolidation to the top of that normal region, that's the 38.2%, the 50% to the 618, most of the time that's just going to be your A wave of a wider
Yeah.
flat consolidation or wider and deeper consolidation.
Okay. How fortunate for you to have a guy like Avi to be your mentor. Where, a lot of guys have to scramble on the internet. They don't know, what's true and what isn't true. And for
Right.
you to have
I
someone like that was a real big edge. I mean, I felt fortunate too. I got to know a lot of people on the floor of the CME when I was
right.
a young man. And being around people that are better than you helps you rise to their level. And I think the big debate, I'm a big believer that the dollar is the fulcrum of the wheel to most other asset classes. And in that same presentation, Avi talked about the potential of there being a huge, if it sets up right and behaves, we get 5 waves up in the dollar, that we could be beginning a huge bull move in the dollar, which is exactly counter to how the market is positioned. We have the
Right.
most bearish positioning in the dollar for a while. So does it look like that 96 low was it a few weeks ago?
I think that 96 low, I really wanted to see a drop down, one more drop
Yeah,
from the 97.50 region down to 95 just to get that
yeah.
100% fib.
The
So,
equality from there,
right.
right? Yeah,
So here's where that looking at by degree is really important. I don't think this was enough of a consolidation after this possible 5 wave move up at a larger degree in the dollar for it to have been all of a corrective consolidation where this might have been a larger wave one and this is all of a wave two. So you can see that I have the fifth wave up here and then just an A and a B wave. But this is a pretty big bounce. But to trade that bounce, you have to realize that you're looking for corrective price structure in a larger, ultimately corrective bounce. That it's possible that just this move to the 382 region
yeah,
would be
102.
all of that consolidation. It
How,
may not even necessarily need to get that much, and even a bounce up to the 101 region might be an alt of this wave four and get a further extension down first before trying to get a corrective bounce. So
have you ruled out one more low? Because I looked at yesterday's action, I don't
yeah,
know, about 97.20 in the Dixie, and it was low from the first inflation report. And should we take out that 97.20 level, it looks like we could get one more decline, which I think in my language would be a three drive, in your language would be an ending diagonal if we still went to 95.
right.
Is that off the table now?
No, I don't think so. I think this fifth wave could, so you can squeeze in one, two, three, four, and 5 waves inside of it. But you could easily give this the same one, two, and then extend your three to here and count this as the wave four and allow
Yeah.
for that one more drop.
Okay. Um,
Um,
it makes me salivate if we get it, because the other thing that bothered me about it, I'm big on RSI, and at the low, I liked the price, so I did it, but I didn't like that we had no divergence on the four
right.
hour chart down there at 96.
But
After this
here's
kind of rally, we will, if we drop to 95, the divergences will be glaring if that happens.
But I think here's a great opportunity to take a look at how we would focus on, looking at alternates and making adjustments because here's what the structure should look like for this purple A wave.
Yeah.
It should be an ABC, and that parentheses A wave should also be an ABC. So this can be coming into the normal resistance as the A wave of that A wave, and you need to hold support in the 97 region as a B wave would be normal support to then swing up towards that 101. And we
Okay.
also mentioned that this 101 region could potentially be an alt of that parentheses wave four. But here's the other really cool part that, where you can see the overlap. This yellow wave five that we were just talking about for that one more low, that because it's a diagonal, that should be an ABC structure also at this degree. And that initial A wave of that wave five should probably be an ABC move down into about that 97 region.
Okay.
So you have everything on the table looks like it should get a corrective retrace down to here in
So,
the very short term. So you're in resistance now at this
yeah,
90, 98, 99 region and
yeah,
looking for a corrective move down to 97. So then you can decide, all right, I think that is only gonna get a B wave bounce, but it could be starting to move to 101. So
Right.
you can play that to the long side, and if you only get that corrective bounce back into the 98s, that's when you flip and go short. Whereas if you get something that looks like five waves up, a little bit past that, towards 98.60, 99, then you can play that retrace, for a move
Right.
up towards 101.
Okay. So why don't we wrap it with all the drama between Trump and Powell, and I'm not going to fire him. I am going to fire him. With, sounds like my career. Um, anyway, your view on the 10-year yield and perhaps TLT if you're tracking that.
I actually track the 30-year a
Okay.
little bit more closely, but we can certainly take a look at TLT. Um, I was trying to allow this to be the start of a bigger bounce,
Yeah.
and it tried a couple of times, certainly held
Yeah.
here and got a move up, but then it couldn't hold support to get
Yeah.
more of that corrective move. So it's a pretty awkward, muted corrective bounce that definitely counts best as a primary wave four now, and then extending lower in a primary wave five, where the primary wave five is equal in size to the larger circle primary wave one at the 75 region on TLT, and an ending diagonal off of there, fills out and pretty perfectly right into that 75 region also. So key resistance
Yeah.
now on TLT is going to be this 88, 89 region.
Yeah.
And this can be working on a wave one and a wave two start to the C wave down in that third, heading down toward about 78.50, and then getting a corrective bounce. So this, because this is a diagonal, it should be very, very choppy. This C wave inside the third of the diagonal for that primary wave five could itself be a choppy diagonal. So I don't really see a strong trending directional trade to the downside here, but it certainly is no longer immediately bullish.
Okay, yeah. So we'll take out the Moody's low, and we're looking at new lows for the move, and
Right.
then possibly we move into some type of economic slowdown, and the bond guys after they'll be puking them out at 75. Who's gonna? I mean, who's long now? I mean, there are
Uh,
some people that have been trying to be long for 2 years, and it's gone nowhere. Look at that chart. Nothing.
there's one very interesting nuance though with regard to the 30-year bond prices, the ZB futures
Yeah,
versus TLT. This initial move down off of the 2020 highs
yeah,
counts much more clearly as an ABC move. This structure could be five waves, but I think it looks better as a WX and then an ABC for the Y wave. So that means that this fifth wave, instead of being an ending diagonal on the 30-year futures, should be an A, B, and a C wave. So it can look very similar with the rest of this C wave being an ending diagonal, but possible that the 30-year actually bottoms and doesn't make a lower low after this low when TLT needs a fourth and a fifth. And maybe that's because the mix there with the 10-year does force that other low. I haven't looked so closely at the 10-year futures in a while. But that was something that I noticed the other day that I thought you might find pretty interesting.
outstanding review of the major markets today with
Thank you.
your take, Zach. Really appreciate your elite work. Always look forward to talking to you. I'm sure
Likewise.
people that watch this live or the video are going to want to know how to follow up, but get in touch with you and keep up with your work during, quite a historical time we're in the markets.
Thank you.
Isn't it? I
Yeah.
mean, have you ever seen anything like this before, like we're involved in now, or am I just
I mean, you've
overly
been in
sensitive?
markets a lot longer than me. I just I always am hesitant once it sounds like there's a little bit of a chorus of it's different this time. So,
Yeah,
things extend past the point where you think that they're going to extend. So,
yeah,
one of the things that we look at is based on that context of at what point is this something new, and is there any kind of reliable consolidation that we had that can be starting that where this can be something that's really new off of it, or is it just further extension? And then if it is further extension, what are the best things to ride for more extension, and what are the things that might start breaking support sooner? So, we
Okay.
continue to post a mix in our wave setups of some short possibilities, but then, whenever we get a good consolidation and there's a good long setup, we post about that.
Okay, well, you showed an index, and I will go with one more thing, and I want your view on it. I had a three drive to a bottom formation in soybeans that set up and rallied corn. These bases in the grains are very long-term bases. And inflation, grain prices have behaved as well as oil prices have since the invasion of Ukraine. All it's going to take is one bad weather year. And I know we have tariff stuff, but are these grains looking attractive to you?
Um, so
Or am I early again?
no, one of the things that I've been struggling with a lot of the agricultural, and I guess some of the futures charts in general, is that the higher interest rate environment that we're in, the gaps when the continuous contracts roll,
Okay.
it really distorts the charts. So I've been trying to go back and forth whether or not I use the back adjusted. And the problem with the back adjusted when you're dealing with a long-term view is that you start getting distortion on previous larger degree lows from a few years back. The back adjustment starts to actually make them invalidate because they dropped, with adjusted pricing. So, we try to look more at localized, most of our people that are trading the grains are trading more
Deeply.
localized price structure anyway.
Okay.
So, in theory, those should really be functioning more as oscillators between price extremes and not as longer term trending charts anyway. But there is a lot that we're bullish on in the agricultural sector. This is the DBA ETF, and it's getting pretty deep as a 1-2 start to the C wave of wave three,
Yeah.
but still holding pretty valid. And we could even count a larger one and maybe an alt wave two if we needed to. But I'd prefer to see it hold this 25-50 region and head up towards 30. And this has a decent amount of energy exposure in it as well, as the agricultural commodities. But one of the other things that I'm keeping a pretty close eye on in that sector is the cattle and pig prices,
Okay. Yeah.
which should be holding some support here. Smaller degree wave fours getting one more push up. This is HE's lean hogs,
Yeah.
heading up to the low to high 120s, and then getting a consolidation back towards the 90 region would be the most
I
ideal.
remember when 40 was high for live hogs and cattle, a buck,
And we
other than
try to avoid correlation arguments, but the when when things are priced in dollars, the movement of the dollar can have an effect there also. So
it's the fulcrum of the wheel, buddy.
exactly,
Uh,
exactly.
Zach Manis, everybody. Best way to get a hold of you on your website so they could watch your work. You could
So
show it if you want. You could show your
uh,
website.
I don't. I might be faster just to say. So on
Okay.
Twitter, it's at ZACMANNES, or on X, at Zach Manis. There's links there to the stock waves and ElliottWaveTrader.net. Those are the best places. We did also started to get active on the Yahoo Finance community pages. Have you looked into that, Dale?
No. Mm-mm.
Okay.
Oh
Um,
no.
it's
Thanks.
it's it it's much smaller than X, but there's some good people who are sharing a lot of the content that they share on X there. And because of the way that Yahoo can gatekeep things with requiring people to get a Yahoo email address, there's
Oh
not a lot
gosh.
of bots yet.
Okay.
Uh,
Well, Zach, thanks for granting this interview, being
thank
flexible
you.
with me, and thanks for edifying the TradeGate Hub community and anyone else who sees this. I really appreciate your presentation today.
Absolutely. My pleasure.
My trading warrior brother, Zach Manis, follow him, and that's an order. Take it easy, Zach. We'll talk
Thank you. You
soon.
too.
All
Take
right,
care.
my trading warrior brother. Adios.